What up traders, what up investors, Ken here from the Dyslexic Investor, and we're looking at another down day. This is on April 1st. This is not an April Fools joke. Basically down almost a tad above 5%, so 4.75% in total, basically closing out. Let's actually look at SPY, my bet. I'm looking at the futures, they're still trading. So 4.5% we weren't down, closing below 1, 2, 3, 4, the last 4 days, almost closing above of last week's. So giving back a lot, just what happened in the past week. And Jim Cramer, which like him, love him, hate him, whatever, did a very good little piece here on a little segment he did on his channel on thestreet.com, and then also via Mad Money, as of giving these barbell stocks. These companies are going to do well when the economy will drop, when the market overall just drops 30%, and everyone knows that we're around the 30% limit right now. And he goes through a list of using Conagra, Pepsico, Mondelez, J&J, Bristol-Myers, and some other individual stocks, of course, Zoom, Ring Central, Citrix, Cloudflare, AMD, and Nvidia. And some of these we do own positions in. And then he also has a second bit on what companies come out on the other end winning from this overall post-COVID world, which is Disney, BA, Costco, Walmart, and Honeywell. We're going to be looking at all these stocks. It's going to be kind of a longer video, so to sit back, relax, we're going to go through and look at each of these stocks, going through the first segment, after the first paragraph here, of which ones that he would like to start looking at now and start buying into, because this is what's currently going on in the market, and then looking at majority of these tail end winners, which we have heavier positions in the top 3 right here, and with some positions in AMD, Nvidia. We own, we did have one Bristol-Myers, we sold that. We own a lot in J&J. But so that being said, we're going to be looking at these charts. We're just going to go through and do some technical analysis. The other one that was also in there at the tail end was Amazon, and then of course also was Microsoft. So that was something very well thought. Alright, so the very first one is Conagra, which is CAG. Pop this guy up. So this is a foods, kind of a healthier foods, think staples here. Very low priced. Basically its all-time high was beginning of the year, or towards the end of the year, or beginning of December, and we're trading at around $30 now. It's kind of been somewhat stagnant in between here, because it's kind of been around the 200 day, and with all the negativity and everything going forth, it looked like it had a pretty good quarter. It's popping up. The 8 is crossing above the 21, which is good. It's closed above the 21. It's closed above the 200 thing. The moving averages are starting to pull up, so I think this is a potential move to add to this today or tomorrow. Would probably be a small position. Again, all these positions I'm talking about, so let's say if you wanted to put $1,000 into CAG or Disney or something like that, you don't put in that $1,000 initially right away. You buy it in little truck droves, and you just buy it in little segments at a time, because commissions are non-existent now. You can just add 4 shares of this tomorrow morning, and then if it drops 5%, you can add some more. But the thing is, you have to do it over an extended period of time. You can't just do it within, yeah, I did it 5 times that day. That doesn't make the difference. You're trying to cost average it down, and then you can set these goals on when you want to buy this. So this one looks really interesting for sure. Another one that we have looked at in the past is Pepsico. We actually had KO, which is Coca-Cola, but PEP or Pepsico is a lot more diversified than Coca-Cola, I believe. This one is not as attractive as Conagra, due to the fact that it's below 200. It has been beaten up. The 8 has not crossed above the 21, and the 21 is still pointing down. So this potentially could be a nice, cheaper price target here of just getting in here at a much lower level. I'm looking here, it didn't go to the extreme of the RSI yet. It is still above its 200 on the weekly chart, which is a great sign, and it looks like it has earnings coming up. So I would be buying this probably and keeping it on a very tight leash around the 115 to 116 range if you can get it at that price. Then next is Mondelez, which is MDLZ, another food canned goods stuff. Alright, so this one kind of looks a little bit somewhat similar to PepsiCo, but you can see that the moving averages are not pointing to the ground. They're kind of slowly kind of curving, evening out. You do see kind of what mix up. Do have earnings coming up at the end of the month of April. Overall, still below the 200, not a good sign. It did have it's above its 200 on the weekly, which is good. It didn't go crazy oversold here on the RSI, which is good. Shake and money flow is positive. That's a great little sign as well. Just a great opportunity, I think. Again, keep it on a tight leash if you add to it tomorrow. Just keep it on a tight leash, maybe re-add it around 45 or something like that. And next is J&J, which we actually own for the portfolio, and they've been doing fairly well due to the fact of they are already doing preliminary testing on a potential vaccine. So that's what you saw, a big jump up this like a day or two ago, and it had a pretty big gap up. That being said, again, moving averages, it's still below 200. That's never a good sign on the daily chart, but the moving averages are moving in the right direction. You have the 5 crossed into the 8, which is good. Now we want the 5 and the 8 start to cross into the 21 and potentially push this higher. We have earnings coming up on the 14th, so basically 2 weeks away. We have earnings for them. This did get beaten up a little bit more. It didn't go full down to the RSI, or I used the 20, not the 30. A lot of people use the 30, and you could have gotten that read there. The shake and money flow is still positive, which is great. Momentum is switching, thank you. It didn't flow, it's still below its 200 on the weekly, but I think the overall adding to your position here again pays a great dividend. It's so well diversified, trading between the range of 27 to 50, 150 is going to be probably where it's going to be trading for the time being once it starts recovering. And then sticking with pharmaceutical and cancer stuff, we got Bristol-Myers. This one looks a little bit more attractive. It's slightly below its 200. The 5 has crossed way much more into the 8, and it's making its way to cut into the 21, which is the yellow one here, and that's going to be potentially, that is already stopped. It's starting to curve straight almost to the upward momentum, and as long as these can stay above the 200, this is definitely going to be a great little buy. Looking at the, wait a minute, 1 second here. This is the exponential moving average. This is the simple moving average. So depending on what you do, this did close above the simple moving average. I used the exponential moving average to give it a little better, more of a detail of this, but this looks really good. If this is not in your portfolio yet, this would be a nice little buy here. It's barely below its 200 on the weekly chart. Didn't go crazy oversold. The shake and money flow kind of took a dip, but I think you can see the range that this trades in. So if it ever gets down to like the 45-ish level, that would be your second addition to add to this position. And the next is going to be Zoom. Whew, that thing has been off to the races for sure. Like, again, I'm pretty sure everyone's like has never heard of Zoom 3 months ago, just like no one's have heard of COVID-19 or coronavirus. And now everyone knows what Zoom is. Like, my daughter goes to Zoom classes for her dance stuff, so everyone is getting involved in Zoom. For me, this is already the easy money has already been made. I think it's not going to be going too much higher, honestly, here. I could see the potential of what Jim Cramer was trying to say on the sense of this could potentially continue to go higher, but this is newer IPO stock, and if it gets down to like the 130 level, maybe start a small position. It's going to be hard because on the way up, you can see that the 21 was a nice little thing of support to kind of bolster it up. It did close down nearly 7% today. I think that's probably due to the addition of a lot of selling. But if it can hold this position here, I'm going to actually put an alert out for this. Oh, not above. Whoopsies. We're going to go if I want to go below that. Alright, but for adding to a potential position, this will be a nice little quick and easy trade for me. And then another cloud-based phone company, which is RNG, which is the Ring Central folks. Kind of looks a lot similar to the Zoom, but it literally had a V-shaped bottom recovery. I'm looking at this one. This thing seems really interesting. This looks like it's been super volatile, and I don't think people know what it is. It's super strange that it got to this low price here and then literally went from 138 up to 250 within like a week. That's crazy, or 2 weeks. That is quite insane there. It's still, the moving averages have crossed above the 21, which is great. Things are kind of slowing down. I like how it's starting to even out here. This one actually seems super impressive in the sense of this could definitely make a slingshot higher to the 250 range again. So the upside is a little bit higher than the potential downside. And then we'll have the next is Citrix, CTXS. And this one, whoa, this one's been flying like to the moon as well. Again, having the Chaikin money flow high, momentum's really high. Everything is above the 8 and 9 or above the 21. You're having it above the 200, which is great on the daily chart. On the weekly chart, we actually hit an oversold a couple weeks ago actually, at the beginning of the year. This thing is off to the races. If you're trading options, this might be simpler just to sell some puts or sell some put credit spreads on this guy, because you just never know what's going to happen, where the ceiling is going to hand here. Next is Cloudflare, which is the net. This is another new stock that we actually wanted to add. I think this is kind of like the cloud security kind of an Okta play, and this thing has been at the races as well. Trading almost exactly like the Citrix and then the Ring Central we looked at, having that V-shaped bottom around the 16th of March, and then just making a skyrocket higher, basically blasting to all-time highs. And this is something that I would like to bet to break the 26 level at a very easy position to do so. AMD, actually, we wanted to add to the position on this one. Oh, not AMD. There we go. This has been a stock that's been in my heart for many years. I used to trade this puppy back over here around the $2 or $3 range, and I was trading 1,000 shares at a time. If I just held that, like, still hurts. Ugh. Anyways, it did sell off quite strong. Let's actually go to a daily chart to give you a little better perspective. It sold hard the last 2 days. Basically trying to make a push another to 50. I have an alert here if it makes above 50, I wanted to re-add it if it could hold that. It didn't. It's basically broke down around the 48.75 level. It's kind of selling off. If it can hold the 42 level, we're looking right about, I don't want it to break here. This would be a nice potential starting position to add back into this. I like how things are. It looks kind of messy here. The moving averages are starting to curl off, but I think could just be a simple of just people getting out and maybe moving cash around. On the weekly chart, it did close below the 21. I normally don't like that. I could see some consolidation again around the 42 to 45 level for the next extended period, but then hopefully we'll get a bounce soon after that. All right, next one is Nvidia. This company I love this company. Love their graphics cards. Love everything they do. Basically having a high at 316 basically of February, and then coming crashing down all the way down to 181. Whew. It's great in the sense of it's above its 200. All right, like there's not many companies that can say they're above their 200. The 8 crossed above the 21, which is very bullish as well. They are kind of selling off, just kind of, this looks very similar to AMD, but the thing is that on the weekly chart, it looks a little bit better because it hasn't closed below the 21. But again, it's only Wednesday, so we have 2 more days of full trading to see how it trades from there. But you can see extremely strong support around the 175 level. I'm not sure where if we're going to get to that level, but again, starter position would not be too shabby. And then I want to cut back to the Jim Cramer statement of what stocks that he likes going forward, which is Disney, BA, Costco, Walmart, and Honeywell, and then also Amazon can do fairly well here. But they're saying that these stocks might be priced a little too high for his taste right now. So the first one we're going to look at, which is one of the bigger positions in my personal portfolio, is Disney. And we cost averaged a lot on this on the way down, basically buying at 105, buying at 100, buying at 95, buying at 87, and then basically getting a small bounce back. But it's such a it's very hard to put a valuation onto Disney, just in the fact that basically their parks are closed down. I need some water. All the parks are closed down. No one wants to go on a cruise line right now, and basically no one wants to travel. So, and there's no sports. So ESPN, what are they doing? Basically, what's holding them afloat is the Disney Plus subscription, which is kind of hard to evaluate just that alone because they have maybe 40-ish million subscribers to that compared to 175 of Netflix. So we'll see how that goes. Definitely I love this long term for sure. I'm like, by long term I mean 5+ years. So if you guys didn't see my video about BA, I'll go ahead and check that on the channel. This is a long-term hold for us here as well for the portfolio. Basically buying in around 100. It ran up to basically 185, kind of sold off ever since then because a lot of people just traded this and just got out for the small little profit there for that bounce. Being a dead cat bounce and kind of coming back down potentially. I don't know if it's going to touch the lows, but if BA gets down to 89 again, please back up the truck unless there's not crazy news going out and about. And let's go to another favorite one in is Costco. Costco, I love Costco. This one looks super interesting. This one I like to see where it ends up. It's acting very strange with the amount of traffic that I've seen at my Costco. It's trending lower, like clearly lower, because the yellow line is going lower, the pink, purple line, white line is going lower, and it's below its 200. So that's not a good sign. But I think it's building up for a potential pop into its all-time highs. It just kind of needs to level off here a little bit, potentially to see on how it comes out on the other side. So I think this could go lower still, maybe even to the 265 level potentially, if the S really hits the F in the market and mortgages start happening and the unemployment just keeps on rising and people are not able to get their jobs back, or the whole market just changes. I think Costco will be fine at the other side, but in the time being it's going to be a little bit difficult. And then the all and everything knowing Amazon. What are we going to do without them, right? Okay, so above the 200, great. Above the 21, great. I just think it's still, I would buy it maybe a starter position when it hits the 200 here. Again, if you have the options to buy fractional shares, I would go for it 100%. I don't have a account that allows me to do fractional shares, so allocating $1,900 into one particular stock is just a very big ask for my portfolio, and I just need to be super careful when I try to diversify on that section. But long term, it's gonna be fine. Like if it gets down to the 1800s, probably a great buying opportunity. Again, by long term, I mean 5+ years. And then the second to last one that Mr. Jim Cramer was talking about a lot was Walmart. Again, this looks a lot like Costco on the sense of a lot of capitulation, a lot of trading lefty righties. I think a lot of people are building positions into this and for a potential, I'm going to say a pop, but I can't see it going much lower than 105 or 107 or 107 to 105. That would be just a great buying opportunity because it's just a staple that it's going to be around, and you could get a potential cheaper price in the next couple days. And last but not least, we have Honeywell. Oops. And this one, I don't know why he thinks this is going to be on the other end. It's beaten up quite a bit on the daily chart. I just think he just thinks this is just a completely discounted, and once the economy starts coming back and getting back into position, that this is just going to roar higher. And I tend to agree to that. It's kind of like a BA play in the sense of it's literally got down to $100 and it's just trying to rally. That being said, this is the one that I don't know exactly what all the holdings are within Honeywell, because I know they used to own oil patches and other things, but I think they actually got rid of that and other just various aspects. But yeah, so that is the overall list of Mr. Jim Cramer. I'm going to do another video just talking about the third quarter of consumer techs, and that's we're going to cover Apple, Facebook, and Google in that little section there, and we'll just go from there. Guys, thank you so much for watching. Don't forget to like and subscribe. Again, this is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.